All right. Hola, guys. ¿Qué paso? How's everyone doing? This is Hala Pablo. Thank you for tuning in. Let's go ahead and look at Bitcoin. I know we've got some action going on. I just want to keep you guys informed, let you know what I'm looking at here. Now, you should be familiar with these two charts. This is the cycle A, the bull cycle A from 2021. And I say A because there were two parts to it. Here was the bull cycle, the all-time high here at 65. We'll just call it 65 grand. Then we came down. We retraced. The retracement was 618, I believe. Yeah. Yeah. Okay. See, to the 1618. This is usually where we see these things retracing to. Once we break the support line underneath the MAC trend resistance. This line here, you saw this is the bottom of the accumulation range that formed afterwards. Okay, so we'll get rid of that to not clutter up this chart. And then we had an accumulation with the deep spring, and then a markup, and the reaccumulation here. And then what did it do? It created another bull cycle. This was another cycle going up. This is cycle B, and it culminated with a new all-time high here. And this was in November of 21. This went a little bit higher, 68 grand or whatever, 69. And so anyway, A and B. So, but we're going to focus just on A, cycle A, because I think it has the most similarity to where we are. So this is about 4 years apart. And there's a lot, it's not cookie cutter, and we've talked about this. These are not cookie cutter. Don't expect them to be cookie cutter. There are certain degrees of deviations in each wave trajectory. You could see throughout the structure, but the general direction of the waves remain. So we have the 3 drive on both. We have the preliminary supply area here, and then we have the 5 wave on this ending diagonal. Here was the all-time high back in 21, and here's the all-time high today. The last one we had, 108 grand up here, and then we marked down, broke structure. This is all normal. Came under. This was broken through. This was the macro trend support, so it's broken through. It now became resistance, and then we started a new kind of like a trading range beneath the macro trend support. Now the price came back down and retested or mitigated the area here. Now this is we'll call this area here the buying climax. So then down here would be the automatic rally point. This is all like Wyckoff events here, and then here would be the secondary test. I'm not going to draw all these out because you guys should already know what they are. And then this would be the up thrust, this second drive, and then of course this would be the UTAD. The UTAD. Okay. Then we see the same here: buying climax, UTAD, automatic rally, secondary test, sign of weakness in B. Now the point I want to talk about is the automatic rally. When we broke down from the UTAD and we distributed through the macro structure, what the price does is it seeks to retest the first liquidity void, which would be the automatic rally point, this point here. And so we see that already happened. In fact, it happened 3 times already in this current cycle where we sit. Well, we saw it happen back in 2021 as well. So this area along the automatic rally point, this support line of the trading zone, is where the new we have a new area of wave activity that trends laterally. The point to keep in mind is that the tops of the waves stay beneath the MAC trend resistance. This is the bottom of this channel here that we see in both. And if you notice, the waves haven't been able. The tops haven't been able to prevail through. They weren't able to do it in 2021, and they haven't been able to do it yet this year. So what do we have here? We have a series of waves playing out that are that are expanding. You see how the waves are growing, these Elliott waves, see this impulse wave up, and then we have this retracement. And now we just had another up, and this is where we currently sit. We're still underneath the macro trend support line, and we've kind of come through this dotted line, which connected the tops of the UTAD, and then this was that last rejection off the MAC trend resistance line that formed another like another trend coming down. So we have two trend lines converging, and as you can see, the waves underneath kind of have a lot of similarities to them. One thing, they keep going back once they get rejected off the MAC trend resistance up on top. It goes back down to touch the area of the automatic rally, which we talked about, the support zone in the lateral trading range. So this area here. Now, I contend that this area is a distribution, kind of like how it distributed in 2021. We had a series of rejections up here, and then it just kind of gave way, but not before one last kind of like rally where we went above the anchored VWAP once again. And we see that here. We went above the anchored VWAP, and we've actually pumped up a little bit higher. This is like, it's not cookie cutter. They're going to be a little bit different because there's more players now than there was in 2021. There's more liquid, there's more institutional play in it. So the waves are going to be different as far as like the breadth and the spread of the waves. But like I said, the overall trajectories kind of remain the same. So these things so if we retrace from where we already talked about how we retraced from this top to the 1618, it brought us to this one. Look how it retraced to the 1618 retracement, brought us to the bottom of this range here. So if this retraces from the all-time high of 108 grand, which I think it's going to do. So far, it's done everything. It's followed 2021 almost cookie cutter. Then this will bring us to 80 grand. See, this is the 1618 here for this one. So don't be surprised if we have a sell-off and we come down and we wick at least this area here, kind of like how it wicked the 1618 back in 2021 when it came down to 29.7. Don't be surprised if we come down to about 80 grand, 80.7 here. That would satisfy the 1618 Fibonacci retracement from the all-time high. If we're going off the low of the range, which would be the automatic rally zone. So this would be the low, as this was the low here. We're not going to go off the low of this because I think this is a different, we've already broken structure, so this is a whole other creature that we're looking at. And that's what I think some traders get mixed up in. They don't understand that, and they take the lows off of this. They say, no, this is, we got to go off this low or something. No, the low is the low of the structure. So when you're doing the initial fibs, so we go off that. So anyway, and then we look at the time that once we broke through structure here with the anchored VWAP, it took roughly 31 days for it to break down through the trading range support line here. And this is 31 days. It took 31 days in 2021. And so here it is, 31 days since we broke structure here. If you see, I drew it out. And if we're going off the same metrics, more or less, then 31 days puts us at January 20th, which is like around inauguration day, right? So like I was sharing with my group, don't be surprised if we have a pump maybe, or something, because we see that we had one last kind of pump here before it retraced and it broke through on a macro sense, and it went all the way down to the 618 fib. It seems like we're having a pump now. I suspect we'll kind of have a little bit of a throwback on here and then come back down into this range, have some more trending and more bouncing as we grow closer. It's about 5 days away, and then maybe one more micro rally before the breakthrough, if we do, and then we'll retrace down. I think it's feasible to retrace down to about 80 grand. So that would bring us around in this region. And then once we bottom here, have a this will be the selling climax, and then we'll pump back up and the automatic rally. Everything's the inversion of what we looked at here, and start a new range. And if it plays out anything like 2021, a new consolidation range with an absorption campaign being reabsorbed, Bitcoin reabsorbed by the market maker in preparation of a subsequent markup. So this is what I'm seeing. Could play out. I think it's going to play out. I think it's inevitable that it plays out. It's just a matter of like how we get there. That's all, it doesn't, things don't always waves don't always go directly, as you know, and this, you have ups and downs. I mean, just look at how these two areas played out. They're kind of different, right? Here you had this steep, one stab, big rejection, bull trap off here. Whereas in 2021, we just hugged this line for a period of time, and then finally it just gave up and dumped. And here we're just having, it looks like isolated just attempts, like 1, 2, 3, come back down, double bottom out on the support line here. Here's another double bottom. So we have two double bottoms, and then another attempt like we're seeing right now as the range consolidates laterally. We had a double bottom here, but they're back in 2021, they were much smaller. They were much more contained. A lot of the time the waves were spent, the price action was spent hugging the macro trend resistance line. So it's always a little bit different, but I think the overarching macro result is always the same in these, which I think this is destined for distribution, and I think we're heading back down into the 80s, low 80s. It's just a matter of time, and it's just not a question of if, it's just a question of when. So that's all I got for now. I want to keep this short and sweet. I got a bunch of stuff I need to do today. Sorry about the rambling. Like, subscribe if you get anything out of this kind of technical analysis, so you don't miss any more updates. And we'll talk to you soon. Check out our Discord group if you want to take your chart reading skills up another level. So we teach Wyckoff, Elliott wave, Fibonacci, Wolf wave, volume spread analysis, all that good stuff. So learn how to read price action and volume together. Synergy. Yeah, that's the stuff right there, man. Okay. Adios. Talk to you soon. Not financial advice. Peace.